Hello, I'm back, and this time I'm going to talk about stock and how to choose stock. Normally, you have portfolio. They learn normally how to select the stock on profitability, uh, TAM. It means the addressable market, and if you look at some videos, some core, you look at some books and some marketing stuff and some economical book, there is always a guide for how to select. Oh, there's a cat. Ooh. There's a cat behind me. There is there's always this normal way, and people say I will not invest in for the Tesla because PA ratio is too big, 400 years to get this. The idea is that the PA ratio tells about how much money they have to make, how many years they have to pay back to get this goal. And for example, for Tesla it is 400 years, and for says Nvidia it is only 10 years. So people will rather invest in Nvidia than in Tesla. But the strange thing is Tesla can go up and Nvidia stays doesn't do anything. So this is totally against the logic sometimes. And there's some people say, yeah, like a Palantir, it goes up because this is a Mona Lisa. This is a specific piece of artist, this company, and they find an excuse, and that's why they think it's go up. But what is really behind it? This is not advice for trading. This is not advice for which the stock to buy. This is just a way to select stock, or how to maybe another way to select stock or to find stock that is interesting. The previous talk I talked about FX and indicators, and there I told the indicator doesn't predict the price of the market. It is the people that use or look at the indicator and react on the indicator, and that is influencing the market. So the reaction from the indicator, from other people, big institution of a mass people, everybody uses, for example, Bollinger Bands. If it hits the upper Bollinger Band, everybody wants to sell because this is top, so everybody sells, and the price goes down. And why? Because it hits the Bollinger Band, top Bollinger Band. So if you look as a trader, think, oh look, it works. No, because people react on the indicator, the price reacts on it. And there are a lot of indicators that sometimes work, sometimes doesn't work, and people don't know why. Because sometimes there's a trend and everybody use this indicator and it reacts on this indicator. It works, and after a while people start not to use it, something else, and then on a day it doesn't work anymore, the indicator. They think, oh, what is it? Is the formula wrong? Is something I have to adjust something, or what happened? It is just a trend. People look at this indicator. Now they don't look at the indicator, look at the indicator, and the market behavior changes. So it is so if you use the basic, that's my thing, the basic indicators that everybody uses, it will react to this basic indicators. So it is more secure to use those basics than those trendy indicators. That was the previous talk. So now, can we apply this for stock? So there are is there a way to do this? So, yes, of course. So how do we do this? Stock has often, if you look at Apple, a cult following. People like a product or a company, and they trade sometimes a company. It is a darling of the stock market, they call it, like AMD. Then it is as a title, advanced money destroyer. So there are times that they hate it, and there are times that they love it. And this is sentiment, and this you can compare it with the same with those indicators. So if you have a tab that you can see, oh, these are liked and these will be bought, or these are hated and these will be sold, you have it already in a filter. So how do you find this out? Now, there are like a ship trader, Jeremy, Amit. You have the Rocket Lab group. You have the Tesla group. You have maybe an Apple group. You have some other small groups that are have at Facebook or at X or whatever. They have their cult following. Wolf invested. All kinds of investment groups, and if you find a group, for example, the Tesla followers, you see, oh, there is millions of people following it. And there is a group that stay invested in this stock. If you find another stock, for example, let me say something, TE, that is a solar panel Kaiser for energy, and there's only a few 10 people or 100 people following it on Grok, okay, the stock is there and it can have profitable. There is no following. So first thing you have to find out, if you select a stock, if you find that this is interesting, you have to look if there is a following, like a cult. You see a stock as a cult, and the Kaiser is the company is a cult, and you look what is the following. If there's a big following, it's more stable. If there is no following, it can be erratic, it can move, whatever. Also, always look if there are parties against it and parties for it. So sometimes you see that people are shorting the stock, and sometimes there is no shorting. So that's also important. And shorting can be good if it is shorted and the shorts are squeezed out, it can jump up. So there are stocks like GameStop was a famous example, because they had a cult, they pushed it up, and the other party was doing an hedge to try to pull it down. Now the uppers won, and it spiked once up, and the story we know, there's even made a movie about it. So how do we get those stocks? Now, and this is maybe interesting. So you're going to collect some like Zip Trader, Jeremy, other channels. You try to find, you just type in Google, channels for stock advice, whatever. Don't buy the courses. Don't listen to what they are saying. You just look at the number of people that look at the video and the following they have, and and you look for a week, what is the top 10 or what's the top 5 stock they are addressing. Yeah, so you look at for all the channels, and then you will find some common stocks. For everybody's talking about Tesla, everybody's talking about AMD or Nvidia, or what is it? Some energy, blue energy, blue whatever. There are always reoccurring stocks all over these influencers. So these stocks, and those have already caught the attraction to these influencers. Now you look at the internet sites, LinkedIn, social media, at X, Facebook, if there is a following for this stock. Now, if there's a following for a second, they are active trading and they say, oh, this is too low, buy the dip, whatever, or this is too high, whatever. You look at it, at this behavior of these people, and then you know, okay, this is an interesting stock. There's an active trading cult following it, or it is not. It is dead, so that is not interesting. So you look at the stocks that are you select them on the social media, the influencers, and so you have a stock. Sometimes they say, yeah, this is a small stock, you have to invest in it. This is a chance. Don't listen to them. Just look at the common stocks. Yeah, if everybody says Nvidia. Then you know, okay, you have to maybe look at Nvidia. Then you look at the chart, you do your analyze, is it a good buy or a good sell? And then you decide. But the tip is you get from those influencers. So why you need those influencers? Sometimes you have a great software and you look at a 50-day average, and if it gets its head out of above this 50-day average, it is a signal that goes up, and you think, okay, perfect down, and it goes up, okay, now it will go up. But if the stock doesn't have any following, it doesn't come in the news, nobody knows it. Yeah, so it will die, and it will move a little bit, but not as normal statistically would predict, because the statistically behavior of a stock is against a mass of people. You need a big cult following that makes a statistically behavior for the indicators and for all the behavior of the stock. So you look for stock that is trade en masse. These stocks can be maybe not interesting. Of course, the easiest way to find those stocks is just the top 10 of an index or an ETF. So you can look at like the most common ETFs. You select all the ETFs of a specific industry, and you can build a portfolio with it. So for ARK Invest or whatever, for Berkshire, you look at all those those investment company. You look at the top 5, and you look what is the same of those stock, and that is your ETF. And then you do reasonably right, because if not everybody is wrong, and also ETFs or you can go. What is also the good thing? You can go just to an index and just expect that the index will go up and buy. If the index goes under a specific moving average, you buy, and if it goes up, you don't buy. so that you always buy cheap, and if it goes up, you will have an advantage there. So there are ways of trading. You can do also precious metals. You can look at, the gold is now low, and there will be printing of more money, so I expect to go up. So you buy the low. There are so many ways to do it, but the most important thing is there a following? You have to find the following. You need to find if it is in the news. You can maybe look at Google Trends if it is ninky, popular, and that way you select your stock. That is, I think, better than use like a program to scan all the stock for specific patterns and think, these 5 stocks are perfect, but nobody heard of it. And some of them will move as predicted, and some will not move at all. So I see this prediction of stock that doesn't work is Japanese stock. I use specific filters. I think, this works in America, so I use the same filter in Japan. These are attractive, perfect examples that it goes up or it goes down, and it doesn't react like that. The stock that react like that are always, not always, often the stocks that are in the media, where a lot of people will trade. And also the danger of those stocks, again, so for example, Tesla, is sometimes they are dead. There is a balance of 4 bulls and bears. If there is a balance, it will not move at all. And some stocks have this problem, and sometimes the bear wins or the bull wins. The 4 of the against it. So there was always this fight, and I think this way of looking at the bulls and the bears and how many people are against it, and you can see it in statistics. Sometimes you can see how much percent of the stock is there is a sell order for, or what the activity is. Very important. If the stock is not active, you don't trade in it. If it is very active, you trade in it. But also sometimes you want to have a very slow stock that is almost dead, and then it's easy to predict. So there are all kinds of every stock is unique, and you have to look at the behavior. You look at what kind of stock you want to do. If you want to have very slow moving stock or whatever, look at the less stock that are in the news, that are more in your style. You can go for the more active stocks that are, for example, the top 10 stocks that everybody talks about. Jim Cramer talks about it, or SNPN, Bloomberg. There are stocks that every day passes the review of Bloomberg or SBS. And in the ticker below, you can write all those stocks there, and you can look at those stocks. Those are active. People see that every day. Think, it's going up. Why don't I buy it? And then you have this amount of people that follow that stock grows. And if it grows, there are more people there. It will act more statistically to the indicators or to the behavior, what it normally expected, and it is more safer to trade in those stocks. But sometimes you can go totally wrong. For example, if everybody thinks, this is it with internet or with the AI bubble, and they all invest, there can be a day that everything goes 50% down. But there is the next problem. So selection of stocks is what I told you. Look at SNS and look at the famous influencers, and you have a list of stock. Now you have to set which stock do you invest in, or what do you like. There is one thing what my personal is, and it is the stock that I'm business in, what my work is. Like I worked for banks, I worked for, I studied chip design, I know a lot about electronics. Those stocks, strange enough, I don't really look at, because my vision, my professional vision of those stocks is I know for the chip designer, for TSMC, NPX, NVIDIA, AMD, all those chip kaisers, I understand how chips are made, and I follow it from my youth. I bought AMD chips and Intel chips, so I know the whole history of those guys. So you would expect, why didn't you invest? And maybe that is stupid. But for me, it is, I'm so close to this market that my thought is not like the market. It is like a private, I think, I'm like, for example, AMD, and I will always follow AMD. But that is not what 90% of the market thinks. So I look at a hobby. In my case, it is space. I know a lot about it, but not about the business. So to find out which stocks are interesting, I look at the influence and I get a selection. You get then Rocket Lab, ASTS, what is it, Voyager, what is it, Planet Lab, Rocket Lab, now also SpaceX. All you get a selection of stocks. So you even use an AI, you get me all the space stock. Look at all the graphs. You see they are similar in behavior. Some go slower. There is always one that is trending, that and the rest is following. So sometimes if for the leading stock goes up, you can take a stock that is a little bit lower, it is a little bit lagging behind, and you buy that, and it goes up, and you take that profit because the whole industry of the whole market goes up. You see also sometimes if, for saying, one big leader of the stock goes down, it pulls everything down. For example, if Nvidia goes down, AMD goes down. But if the leader of an industry, a chip builder or some neo cloud number one or a software company pulls down, it pulls everything down, the whole market, the whole industry. So this also things you have to look at. So do you want to take the number one or do you take the number two? That's also a question. So for everybody thought all this, they take Nvidia as a number one, but the biggest growth came from, in the beginning it was Nvidia, but after that it stuck, and then AMD run up to Nvidia. So sometimes it is number one in the beginning, but if it dies out, the run dies out, it goes more flat, maybe number two will catch up and you switch your investment to number two. These are all things you can look over different stocks and different industries. For an energy company, the leader of the energy company goes up crazy, and there's always another one that follows it. And so you always have some time. If you miss a movement, you can take another stock that is aligned on the same business, it will follow. This is also not always the case, but that is why you always have to look past in the back. Is it following always the leader? And if it is following the leader, but it goes slower, like 1 week slower, you still have a chance to make you can still buy the other stock, take a little bit of uptrend, or the trend is down or up, whatever, and you can make a profit in this way. So it is stock choosing, and what you want is all depending on who you are and how the market is and how the sentiment of the market is, because that is not the indicator, not a CapEx or whatever, a number. That is not really important. It's important that you know that it is accepted in an index, because everybody has to buy it, but sometimes it doesn't move, or that it is getting positive. It was always a red company and now it becomes profitable. That will give, of course, a jump in the stock. And if you know, oh, maybe this year. But if you really want to look over a long time and it doesn't interest you whatever happens, you just want to know if the stock goes up, you also have to look at those influences. If it is for years and years on the news, this stock will go probably up or it will stay the same. And if it is a dividend stock, you're so like Coca-Cola, for example, is often used as a dividend stock, number one dividend stock. So if you want to have a dividend stock, you name the famous, often talked about stocks for dividends. And you don't take some strange stock that has a big dividends, but you never know that the stock price can go down and then your dividend is not as much as you thought. So that is a reason. And I want to tell that I know a lot of studied computers, and my hobby is more rockets. So I am invested more in rockets than in my what I know a lot about. What I already said is because I have a specific vision. Because I worked in the industry, I know banks, this is good and this is bad, but this is not the image what the investor sees. This is your personal vision or your inside vision, but other people don't know. So that is why I think it's a little bit dangerous, but maybe sometimes you have an advantage if you work in the medical field and that you know that a breakthrough is coming, then you're sure. And also with computers, if you know there's a breakthrough coming, you can make a good position. But the mistake, the thing that you stay invested and the company goes bankrupt is that you have a specific feeling because you know it better. The problem is if you think you know it better than the market, that's already the mistake. So you always have to be, I don't know, I need to check it, or I need to find what the other people think. So that feeling you have to have around the stock. Not that I know for sure it will go to the moon. Just buy, close your eyes and just buy. Can be if you have a very convincing reason that this stock will do this, but there are only a few stocks that can do that. If they have, most of the companies go to zero. I think 99% of all stocks goes to zero. All companies disappear. And only a few will stay big, and those few are most of holdings that they are spread their business over multiple industries. Those survive, like General Motors or something that does like Philips or like Hyundai or Samsung. Those will always survive because they make all kinds of products. But if you have a specific niche, like for a specific telephone, a specific software thing, or a specific hardware thing. Now, it can be that in 2-3 years it is very popular, and then the population is less and the company disappears and nobody uses the product anymore. And then the stock is gone. So your selection also has to be, how long do you want to invest, and how long is the survivability of the company? So if, for example, that's also one of an old time when I made software contracts for the company that I worked for, I looked at the viability of the software. So we bought software, or we use software that at least 5 to 10 years would survive. I don't buy software where I don't know how long it can survive, because you use the software, your whole company is adjusted to the software, everybody uses it, and 2 years later it's not supported and the company goes bankrupt. Then everybody has software. Okay, we can only use it 2 years, and then we have to change again to another product. So you have to know at least that it is going 10 years, okay, or longer. So then you also see that they always go to the big names, so the Microsoft or the Googles or the Amazons or whatever, and not to the smaller companies that have the edge, the fastest way, the best way of the software, because at the end, the big companies will survive it. The small companies, everything can happen. 99% will not grow as big as a software company will not become as big as Microsoft or as Google. So it is rather the bigger chance that this small company technology will be implemented by Google in another way, and it will do the same thing. So this is also for other things always. So look out what your long-term investment is. So this is not advice, but for myself, it is. I thought like Tesla has a good chance, SpaceX has a good chance. Then you have the Googles, maybe Microsoft could be a good one for hold long. And you see that is already the top 10 of the top 20 of indexes, because these people do the same thing. They think, okay, which is the most survivable companies? What are the most strong companies? So people have already done the work you are doing, and you just copy it. If you have a master in something, you copy the master, and you go with the wind. You follow the master, and that is the easiest way to make money. The easiest way to make money will not say you make a lot of money. You make money. That's also, or sometimes you don't make money, but it's a good try then. You don't. But if you take a high risk, like the old times you did, like penny stocks, you can make a lot of money, but you can also lose it all. So, and there comes the word portfolio. So if you have this high volatility, like the penny stocks or whatever, high risk, piece of your portfolio, and a portfolio you have to have that you can lose it all. That is the first setup. So you make a piece of it as high volatility and more game or more luck that you win, and if you lose, okay. Then you have a middle part that goes up, that are companies that are growing, that are famous, that are in the top 20 or top 30 of ETFs and indexes. And then you look for, in those good companies, the company you think, when I go with pension or over 10, 20, 30 years, it will still exist and it will still be growing. Like Amazon. If you take Amazon, it's making books, but it will go other products. You see, so in 10 years, everybody will still use it. 20 years, everything will use it. They will find new markets and they will adjust it. Maybe they will add Blue Origin in, and they go to space, and they now also have AWS. So if you have a conviction, you say, okay, this is it. That is your investment stock. And for investment stock, you collect stock. You don't look at the price. You look at the number of stocks you can garner, of the amount of percentage you can get of this company. That is how you invest. The middle part is more a game from, okay, I want to make money for the collection of my investments. And you have this high volatility. That is more the game. And if you make a big profit, you can fund that for your other, the more serious trading. But if you lose it, that's it. And also, if you're young, you put money in three of those three parts. So you have a specific, say every month you buy one stock of your long investment, you buy 3 stocks or 2 stocks for your middle investment, and for the high volatility stock, you take an amount for $100 or $20 for high speculations. You buy 2 or 3 stocks in your middle, and you buy 1 stock of the stock you want to keep until you're going to pension, or if there is some, you really have a long plan idea of it. All those stocks, if something happens, you have to be able to pivot it. And this you do once a week or once a year, or you look back, is this still the good? Is this still the company I am? Maybe the CEO changed and you don't like the CEO anymore, or where the company is going. Maybe PayPal was good, and now you think, PayPal is not it, and sometimes you have to switch. And sometimes you're right, sometimes you're wrong. You don't know, but it is about, sometimes for your long-term stock, you always have to look maybe once a year or once per quarter. You look at the quarter reports and you look at the CEO and the board members. Is this still the company I want to invest long time in? The middle stock is more, is it still Ninky? Are they not going bankrupt? Is the trend of this the company, what it makes, is it still in the market? It is not all technology and it will die out. There's not somebody else on the market that will take over their business. And so that's also for you to make a high return, more higher return as normal. And then you have the volatility spill. That's more a game, because if you are trading and you make only 2 or 3 trades a month or a week, it's not fun. You have to still be interested in everything that has to do with trading. So that's why you have this small portfolio, maybe 5% or 10% of your portfolio, and you can play with it. You do every day. Maybe you can do day trade with it, or you can do a daily trade with it. So you're active and you follow the news and you have some fun with trading. But the more serious things are always going a little bit slower. And why is this so important? I think if you start young, after school or after you have your first salary, or you work somewhere, always accept, if you get a company that releases stock, have a stock program, accept that, put money in the stock, because it is cheaper, and sometimes you can sell it and you can buy a car or whatever for it. But always keep in stock and keep on trading and looking at this thing, because this is not learned on school, and this is maybe the most important thing that missed in my education. That if I would, when I was young, I was introduced for a company to look at an internship, and I went to another company, but this was Apple. If I would go then to that company and I got maybe a job there after that I was through, that I maybe had a lot of stock of Apple, and maybe I was better retired as now. And I saw more of these things that for another company where I worked, I got a lot of stock and I cashed it out and I could go to Japan. I also sold my house also for it. So I sold my house, I got company stock. Well, that is how I ended up here. So that is sometimes what can happen. But if I knew earlier, that's maybe not a big mistake because I didn't know, but this may be a mistake of education. If you're at higher or middle school, you have to know more about how to buy a house, how financial works, how stock works, how now in these times, how gold and all those other things. There has to be some lessons there. And if it is not on school, now you have the chance that there is YouTube and people are making courses. I think this is very important, and this is underestimated. And especially now, if AI comes and nobody has a job or the jobs will be eaten up, investment is another way to make money. And I think also they will try to stop it, that you cannot invest or you take more tax about it. But this is, this is the missing thing. So my advice is look more at copy. Famous or well-known people know or active traders, their portfolio. Try maybe, if you're young or you don't know what you're doing, buy just the famous stock, like the top 5 of the index, buy those. But take maybe a test or a demo account and trade, or just on paper. And you write down the price and you buy and you trade when you sell, and you just play this game, and a stock game. And if you, so you give yourself an amount of money, you buy stocks, and you keep it on in a book like this in a book, and your stocks that you buy, and that's it. If you have maybe a thing that you have a fake money or demo account, you can trade. Maybe you can learn to trade with it. Sometimes you do very good with a demo account and a real account. You get another emotion because it is real money. So that the next step is, if your demo account is and you are good at it, or you think you're good at it, try to do it with real money, but use then smaller stock, small money. The problem is, don't go to penny stocks. So you need to have the real stocks, and like there are stock companies that you can buy partial stock. Like you can for a stock, Berkshire is very expensive, and if you want to invest in it, you have to have a lot of money, but you cannot. But if you have like Robinhood or you have a swap or whatever, you can buy 1% of a stock or 10% of a stock, one stock, a tenth of stock, but you better use those kinds of accounts that you still look for your the stocks you like, or what you used in your demo account where you was a millionaire. Of course, you give yourself $1 million and you trade with $1 million, and you will see it is much easier than that you say, I started with $300 or with $2,000. That will trading was much more difficult. But in reality, you have only $2,000 or $3,000 in the beginning, or maybe $10,000. So how to do this these days? It is easier because you can this partial stock. So you can do the stock that you like. You can what you think that are going good. You can buy because you can buy a partial of it. And also in the near future, stocks will be traded 24 hours a day. This has an advantage that you can always trade and you can always try to make money. There's also disadvantage because now the earning calls and you have all those activities. Normally the stock market is closed. Yeah, for earnings call, they always do the earnings call after or before for trading. But if you have it maybe in the near future 24-hour trading, then you get something like FX. The earnings calls go up, it goes spikes down, it's good. Or spikes up, it can go anywhere. And if you have then automatically stops or automatically buy and sell orders, those will be activated. And people will use that to make money. Not the traders or the retail, but the more institutional traders will try to kick you out and try to. That is the game. What is happening on FX, and they will use it also then in stock. But for you, it can be maybe so if you want to like a stock very much, and there's a report coming out, and you think, oh, maybe it becomes very cheap. Then you have maybe a chance to set a buy order very low, and if it hits it, you can buy cheap stock, or you can go out. You can take, okay, if it spikes up, sell it. So there's the trading will become different, more like FX in the future with stock. I have to look. Okay, 4 o'clock. The dogs eat. It's now 3:35, so 20 minutes. I will stop this. So I think we will see something like that in the stock market, that it will go more to FX or to Bitcoin. So now we have talked about stock, what to select, and your portfolio a little bit, how to set it, and now also how to start with it. Start young, start with a demo account. If you start with a small amount of money that you can always lose, you can throw away. Save, do every month, put some money in it. Even if it is $10 or $30, put some money in it. Buy Bitcoin, whatever, or buy gold, a piece of gold or whatever. You cannot partially buy, but be active and keep on adding money in it. If you lose, it is like an education. If you think, okay, you do $100 a month, it is like buying a book every month. But it's more fun. It is a short game. You learn. You will have to have interest what you are buying. You have to study stock. You have to do what is the PA ratio? What is this indicator? What is carry trade? What is interest rate? What is doing the Fed? What is this? The war? Why is oil going up? And with oil going up, why are other things going up? And shipping and whatever. You will learn this is a trigger for you also to learn more about the world, more about countries, more about what happens if there is a world, what is the economically impact of a war or a specific situation. But also if you have a hobby like space, now look at the space companies, what they are doing. You will be automatically interested in new projects, how they invest, what the money is. So you learn a lot about your hobby. If it is like space, or if you like cars, then you look at car companies, what they are doing. If you like trains, you look at train companies, what they are doing. So you can use a hobby as an investment, or to learn more about your hobby, but also to learn to invest. And then always look if you're older, like if you're at 40, you're thinking you're at a point in your life that you think, okay, I will not live forever, and I have to think about if my work ends or whatever, I have to save money, or I have to buy a house, or I have to get a relationship. Then it gets serious. Then you have to start really, or maybe if you're lucky earlier, you start to really put money into a saving or in trading accounts to make money for your pension or whatever, to extend to you add to your pension. Or maybe you decide to leave the country, go to another country because there the tax is cheaper, and that you all learn in the years that you are studying about economics, because of you are trading and you are interested in money. Because money, the easiest way to make money is with money. You can do a job and earn a specific amount of money, but if you can double your money in a week, sometimes the stock goes up 100% in a week, or sometimes more. This you cannot do with a job. You cannot go to there's not a month that you get a salary that is double the amount of salary of the previous. Yeah, maybe it's Pearl. Hey. Some jobs are like that, but the functional job, if you 9-to-5 job with a normal thing, an office, this is not possible. You always earn the same thing. So I advise, if you have money left over that you can lose, don't lose. So don't get too crazy to invest everything, sell your house or get a mortgage on your house. Don't do that. Money that you can lose, invest. You have to build up at least 10 years or at least five years before you're really going to trade. 10 years when you really get serious, and then you go. If you are late, then the only way is you have more time often. If you're a bit older, study more. Look at advice, look more at books, read books, and then you can maybe increase the experience in maybe 2-3 years. But then still be careful, be very careful, because if you're older, if you have more to lose. And so that's my advice for stock trading is you have to be careful. But if you can start young. It is much better because it is compounding interest. If you make every year 2% or 20%, 10% profit, and you can do it for 20 or 30 years, you end up with a lot more money than you can if you only have 5 years or 10 years doing this. So start early, study early, understand money makes money. Look at the indicators or whatever people say. Don't move the market. The behavior of the people move the market. So if you know what the people are thinking or how they are behavior, you can predict a little bit the stock. The selection of the stock you don't have to do. It is done for you. Yeah, the ETFs, look for these stocks. So if you're interested for space, look at the space ETF. What is there, the number 1, 2, and not one, maybe 5 ETFs that go about space. You filter what is the best, and that is what you name. Look at the influencers, which space stock they are talking. Some of them are, of course, nonsense because they want to make profit with spikes. But the more serious stocks they are talking about, That is what you select. That's it. For now, I will make another stock more about something else. But this was for how to select stocks, because I had talk about indicators. So I also want to tell about how you trade or what you do with stocks. I'm looking for my mouse. So now you know how I look at stocks. So stocks is easier in a way than FX, because it is more long term, and you look at the groups or social people or the behavior of people that are invested in those stocks. If you don't know who is invested in the stock or whatever, it is unclear, don't go in the stock. It has to be a very clear stock. Of people that follow Apple people will always buy a new Apple. If a new Apple phone comes out, now you look at it, okay, you look at the history. If a new Apple comes out, the stock goes up. Then you know what to buy, because if it goes up, then if another model is created, probably it also will go up. And if there's a hard following for each something, it's okay. And even the easier way is if you find a dividend stock, for example, Coca-Cola or another thing that pays dividend. Even if the stock stays the same and grows a little bit a year, you still have this recurring dividend on your account. And that's maybe the best thing for young people to start, and then do a demo trade on the more explosive stocks, to just learn the behavior of people, the crowd mentality. That is your so with the indicators, with FX is different, but if you do with stock, you have to find out how people are created. There's a famous graph, up and then down, and then one kind up and then down. That's a that cat bounce. So it goes convinced that. So there's a famous. You can look it up in Diggers. It's like the pump and dump. It's like the bubble chart, and that's often you see it back if you look at like Nokia, or a company that was in the past very famous, and it went to netting, or it is a normal company. Maybe also Cisco, they went up and down because it was in the hype of internet. You see the same pattern recurring in all graphs. So if it will probably also happen with other stock that now are very popular, but sometimes it is not the case, like with Amazon or with Google. If there is a real future prospect for the thing, for memory, for computers, there will always be growing more and more memory. So you think, oh, this is spike and goes down. Analyst says, oh, it is a bubble, it has to go down. But less memory? No, it will only be more and more and more. Maybe the line doesn't go up like always, like Sugoi steep, but it will always go up. It always catch up to the price. So if you buy now, it doesn't matter when you buy, it will always overtake that price. If it is not 5 years, then it is 10 years. So some businesses are like that. They will always go up, and they will exist for a long, long, long time, or something strange has to happen. Normally, they will be taken over by some other company, but then you will get the other stock. But these things are there, so be careful. Not everything is a bubble. And sometimes the analysts use this to push people out. Also think about, people are sometimes trying to push people out of a stock so it becomes cheap so they can buy it. There are market makers. So market makers always have to take the other side of the trade. And they sometimes will also want to have a reward, and they pull it down with, and then they can do. So always think about it. With stock, there's a buyer and there's a seller. You always you think always on your side, but there's also another side. Sometimes your order will not be filled because there are not enough sellers for you to buy, or you want to sell, but there are not enough buyers. So that's why you don't trade with penny stocks or with small stocks, because sometimes you can have a lot of stock and you want to sell it when it is a top, but there are no buyers for your selling stock. And then it goes down and down, down, and you don't know what happens. And then the profit is gone, and then you sell your stock with a loss, or not at the profit point that you thought. So don't trade with small volatility or small amounts of float. Always take the stock that is often traded, is most famous and most used. So it's easy to get out, easy to set it. So all those problems you don't have with those stocks. So that is my advice. This is my advice. How I think about it. It's not what you have to copy. Not do your own thing, but see it as another way to look at stock selection or stock, building a portfolio. I wrote books about building portfolio, also to how to select stock, or what my thinking is for how to set up a portfolio. There are books on Amazon that I wrote about it. You can look at it, but I think you don't have to look at it. Just do it. Just play around. Accumulate your own knowledge. There are AIs. There are 4 or 5 AIs. Ask them to give you advice on portfolio, how portfolio is built, what are the metrics you have to look at. But they don't tell you that you have to go to influencers and social media. That's Grok will not tell you to do that. That is why I make this video, and I think that is more important, because logical system think that everything is logical, bound on statistics and bound on numbers. But this is something, stock and trading is on emotions, and a human factor is there often the most important thing, more than logical numbers. So that is this thing that why the market is always not predictable, because it is not logical. It follows the unpredictability of the humans, and especially at the group behavior. And that is what you have to look at, you have to study, and you have to experience. That's it. I will end the stream and maybe make another stream about something else, very technical or whatever. But for today, I made 2 videos about this and about SpaceX. SpaceX is probably still down. Let me look at it. Where is it? Here it is. Fly is up. That is also down. Was yesterday up. Tesla is night is up. SpaceX is still 7.5% down. I don't know why. Let's see you tomorrow. Bye-bye.